Hey everybody, welcome to this Wednesday morning. It's 9 a.m. Eastern time and it's the game plan time. Thank you for joining me, guys. Again, the viewership has been growing and I want to send out a special thank you to all of you guys watching because it does mean a lot to me. It means that the information I'm giving you guys is worthwhile and you're finding it useful. So without further delay, we're going to get right into it. I want to get into the fact that today is a big day. After the market closes, NVDA reports earnings. They are basically pricing the stock to blow out earnings even beyond expectations or even the whisper numbers. So let's take a look over here at the chart. I want to show a few little things here on this chart. So first and foremost, yesterday, right, we had this big gap up in the stock. Going into the game plan yesterday, NVIDIA was trading all the way up at this former double top right here. All right, now what we saw is it opened at that level. And again, if we just draw a trend line right there, that's what's considered a double top. And again, double tops are technical resistance levels. The reason why double tops work is that you have a lot of people that bought in all in this area, right? They all bought in there. They thought this was going to go well over 500. They bought into the AI hype. And what ended up happening? Price ended up declining precipitously. They found themselves down basically 20% in a matter of 2 to 3 weeks. And so what ends up happening is when price goes back to that level, those people that were down 20% 2 to 3 weeks ago, they say to themselves, okay, I'm back to even. I'm break even. Psychologically, that makes them say, okay, I want to now get out of the position. So they sell. All these people then are starting to sell. In addition, technicians like myself see that as a double top. We know that's going to be resistance, and we're also selling short right into here. So that's, again, one of the reasons why double tops work so well, especially on names that are so extended like NVIDIA. Now, again, in all fairness, does this mean that we're not going to see this blowout earnings? No, I talked about it yesterday. Remember, based on where we were trading, I said the upside, and we were trading right up here. I said upside was to this line at around 505. The downside at that time was down to 400. Now, since the stock came back in yesterday and fell, I mean, right at the open, it got smoked to the downside. Sellers, sellers, sellers. Now, I also think, by the way, there were probably some institutions that said, listen, the stock has just run up 20% in about 5 days. Let's take some profits ahead of earnings since earnings are always a wild card. But interestingly enough, one of the things going into earnings now, what we see on the chart is that you're essentially equidistant, meaning that from yesterday's close where we're trading pre-market, it's about an equal move here to here. All right, so again, that's just something of interest where we're going into earnings where there's an equal distance. So I would still say the upside max is probably around 505. Downside is around 400. And again, we're trading give or take around that 450 to 460 range. All right, now again, if you're asking me where this is when earnings are reported or after earnings are reported, I honestly couldn't tell you. What I do know is this, guys, and again, I will say this. There are countless situations where if you go 6, 12 months out, after the hype, these stocks tend to come back in. All right, so for instance, if we go to the chart on Tesla, let's take a quick look at Tesla here. TSLA is the symbol right there. And if we go to the bigger time frame, right? If we go to this bigger, let's go to the weekly on this Tesla chart. And remember when this had this soaring move to the upside. And again, very, very reminiscent. This type of move, very reminiscent of what we were seeing when it comes to NVIDIA. And what we remember is that all these analysts were doing the same sort of thing. They were all talking all the craziness, upgrade $700, $800, $1,000, $2,000, $4,000 price targets on Tesla. That was the height of the hype. And what we know is that competition is the key here. So I'm going to talk like I come to you guys and I want to put facts on the table. So these are the facts. Throughout history, there's lots of scenarios where stocks go crazy, just like NVIDIA, just like Tesla. You could go back to the early 2000s. It was Microsoft. It was Cisco Systems. There was countless names back then that went crazy. I mean, all throughout the years. And what key here is that Tesla has EVs, and basically during this period, they had a monopoly on EVs. As the hype built and the profits swelled, competition comes in. Ford, GM, Toyota, Nissan, Mitsubishi, I mean, you name it, Rivian, Lucid, all of them. And now what we're seeing is Tesla, by the way, is down pre-market, but you're seeing that start to come back in because ultimately their monopoly is fading. Competition naturally is drawn to where prices are best or margins are best. Now, what do we know about Tesla? We know that their margins are shrinking. They're cutting their prices on their models because, again, there's so much competition. And so that's really, really important. And just to use that as an example, all right, if we flip back to NVIDIA here, that ultimately, and this is my point, I can't tell you with good conscience which direction this is going to go on earnings. I just can't, right? There's no way I could say, hey, it's going to be down or it's going to be up on earnings. One thing I can tell you guys is that if you ask me 6 months from now or 12 months from now, I do think it is down because competition is coming. AMD, Broadcom, I mean, you name it. There's 30, 40, Micron. I mean, all of these, they're all going to go into these high margin products, these high margin chips, and that will eventually drive price to the downside. So again, don't know where it's going to go on earnings, but overall, 6 to 12 months out, it is lower for sure, in my opinion. All right, let's jump over here, guys. I got some other stuff to talk about. This is some data. So one of the things that came out recently is now this is the meeting probabilities for hikes with the Federal Reserve. So I'm now switching away from NVIDIA earnings into hiking. What's the Fed going to do? Because remember, Jerome Powell has a meeting. He's basically has Jackson Hole, the conference, the Thursday, Friday going into the weekend. And he will be giving a speech at 10:05, I believe, a.m. Eastern time on Friday. Markets are going to be on the edge of their seat. Now, what we're seeing here is that the market is finally coming to the recognition that there's going to be no rate hikes until next year. In fact, what we can see here is that clearly the market is anticipating that interest rates will stay between 5.25% to 5.5%, going all the way into the March or through the March meeting next year. And again, here's your March meeting next year. Okay? Check that. It's even lower. It's even the May meeting. All right, so even through the May meeting of next year, then we start to see the market expecting a rate cut in June. In the June meeting is now what the market is anticipating for a rate cut. Why is that important? Well, it's important because we now have a scenario where the markets up until now were all anticipating a rate cut before year end. So remember how the Fed was saying higher for longer, guys. Hello, hello, higher for longer. Well, the market kept saying, no, we don't believe you. Well, the market is now finally starting to believe you or believe the Fed. The reason this is important is it means more restrictive policy on money for longer, which eventually drains money out of risk assets. All right, so again, little things like this are important for us as technicians because we have to understand you don't just want to, it's one thing to read the charts like I do, and the charts are great, but you also want to, in my opinion, understand the macro. All right, so a couple other things here I want to just quickly go over. This is a good chart here. Let me refresh my chart here. So this is an interesting chart that I came across, and this is a chart showing that the median selling price for U.S. single-family homes is now, all right, new home prices are equal to existing home prices. Okay, now you might say, well, why is this? I mean, usually you would think a new home would be priced higher than an existing because it's brand new. Everything's new. Price is generally going to have a premium. What this tells us, and this is fascinating, we saw this with new home sale numbers yesterday. We saw a decline, a precipitous decline in home sales yesterday. Remember, I talked about that in the game plan, 10 o'clock, we had the home sales data. So we saw a pretty big decline. And what this is now telling us is that the home builders that are selling new homes, okay, this is important, the home builders that are selling new homes are recognizing that the market for home buying, because of rates, is declining and they're dropping their prices. All right, the retail, the yous and the me's, the general public that's trying to sell their houses, and this is very normal psychologically, they are not yet recognizing that the housing market is stalling, and they're saying, hey, I still want to get X price for my home. Home builders have the inside information. They're the ones building the homes. They have the inside ear to the home building market, so they're able to say, hey, listen, we see the weakness. We got to drop our price. These guys that are retail, that are selling their homes, they're not doing that. Eventually, this will happen with these guys as well, and they'll start to recognize it. But I thought that was really interesting because it is showing that the home builders are now recognizing that rates are so high that they have to start dropping. The demand for houses is falling precipitously, and this, honestly, both of these numbers are going to continue to go lower, but this one should play catch up in terms of going more to the downside than new homes. All right, so I thought that was another interesting little tidbit here of information. I want to keep going on to a few of these other ones. This is just an interesting chart I wanted to bring to your attention here, guys. So essentially what you can see here on the macro data is that this is the forward PE of the market versus real-time, real 10-year treasury yields. And notice how generally you track, right? So it's generally, it tracks. Look at this that has opened up. What that tells you is there's a mispricing here. All right, so ultimately, when you see the forward PE, 12-month forward PE, and we're seeing that this has gone up, but the real 10-year treasury has dropped, this means that in the very least, this is going to come down, stock market should come down, and even and yields probably start to, you start to see the pullback in yields. These things should meet in the center. Now, that's your best case scenario. You could have this go a lot lower and meet down here, but ultimately, this is what we would refer to as a jaws opening up. Jaws opening up, at some point they slap closed, they slam closed. And ultimately, again, this is another signal that markets are likely going to continue to go to the downside. One other thing I want to quickly talk on here is this one here. This is another important one for those of us that are into the overall money situation in the markets, is that we know that M2 money supply is the overall money in the markets or in the system, right? And what we can see here is that in July, M2 fell 3.7%. It's the longest and deepest of the money supply contraction since 1933. So what we're seeing is we're seeing rates that the market's anticipating staying higher for longer, which again is taking, remember, the higher you raise rates, the more money it sucks out of the system. Why? Well, because people park their money in bonds. They say, okay, well, I can now get 5% on my bonds or in my money market or anything like here. Let me just lock it up and get my 5% or 6% or whatever it is. It's taking money out of the system. All right, so ultimately what we see here is a decline in M2. And again, look at the increase in M2. And if you charted the S&P 500, it would look very much like this. The only difference is the S&P's gone like that, while M2 has collapsed. And so the thought process here is that you probably, again, based on data, and listen, you can believe me, you cannot believe me. My point is to give you information, to give you facts. And this is data that you have to take and you can decide what you want to do with it. And that's really the idea of the game plan, is to give you guys a plan or at least give you information where you can formulate your very own plan. All right. So on to the next thing. We keep going with the data here. I want to go to a couple other charts here. We're going to flip over to some actual stock charts. We have to look at the dollar as well as the yields. So again, one of the interesting things here with the yields, this is the 10-year yield, by the way, the daily 10-year yield. We know that we got a double top and we got a double top. Interesting, and this is very fascinating to me. What we're seeing is yields are starting to pull back a little bit. From 4.33, which was this high here, which we pierced, we're now back to 4.26 on 267 on the yield. Now, why that's interesting to me is because we've seen the dollar recently rally while the yields were going up. So dollar up, yields up. But if we look at the US dollar here, if we flip this over to the US dollar, the dollar is actually moving up today as well as yesterday versus yields. So there's a small little divergence going on here with the dollar, where the dollar is moving up, but yields are coming in. Now, why could that be? And I'll tell you guys. All right, so yields could end up they could start coming back in. So you could have yields, right? We could have yields starting to drop while the dollar goes up in basically one scenario. And that scenario would be if the economy starts to weaken, but the global economy starts to look worse and worse, and people run to the dollar, and actually they start going into bonds. The more demand for bonds, the lower rates can go. And so basically, if people start to get panicky about the global and domestic economy, you then see bond yields falling, right? but the dollar can actually increase. And again, this is very preliminary. I want to be clear on that. Very, very preliminary. I'm just noticing this little difference right here. I'm giving you guys like live action here. But that's something that's really, really piquing my interest, is we could be seeing a breakout on the dollar. It's too early to know. It's just piercing the line. But I'm watching to see if that's starting to happen here, as I do think, again, that is something to pay attention to. Okay, let's jump over to this chart over here, guys. We're going to go back and forth, left and right, whatever we got to do here. I do want to show gold. Now, again, the key to gold here, okay, is that one of the things I've been saying is to buy gold. Okay, and I've said buy gold because we're seeing divergences, right? We've seen a pretty sharp move in the dollar, especially today and yesterday, and look at what gold's doing. Gold's actually moving up, all right? So what we see here is gold is actually now at 905 starting to push up. The reason it is because we have a very clear trend line, right? Trend line, trend line, trend line. We hit it here, and now you're starting to bounce. But the other fascinating thing is this, is that the dollar is actually up today and gold's up. Safety trade. Think again, what did I just say on the other screen, right? We talked about why are yields dropping a little bit while the dollar's increasing? Are people starting to get worried? Well, you know what does well in a fear market? Gold. And so again, we'll have to see where this goes. I'll show you guys one of the trend lines I'll be watching in the near term is going to be this one right here, from this high to this high. That'll be my short-term target. And then if it can break out of that, you'll go test your triple top high on gold, and you could break out at that point. But right now you have to get through about $1,950 on gold is your resistance level. But nice little action on gold here, I have to say. Good price action today. All right, couple other things to go over here as I keep my charts as clean as can be. We do have some stocks in the move today. I'm going to cover Bitcoin, so don't fear, guys. I know there's a lot of Bitcoin investors out there. There's some interesting stuff on Bitcoin. I'm actually slightly short-term bullish, and I'm going to tell you about that in just 1 second. All right, Peloton. Peloton reporting horrendous numbers this morning, guys. This is not pretty. I'm just going to be flat out honest with you. This is an all-time low. I don't even know if you can see over here in this lower portion of the chart, but we're now seeing Peloton closed at $6.99 yesterday. It's trading at $4.99 today. All-time low. How do you trade this? How on earth do you trade something that's at an all-time low? And the answer is, on a technical basis, it makes it very, very hard. It's more of a gamble at this point. All right, do they get bought out at some point, or do they go bankrupt at some point? But ultimately, they're hemorrhaging. It's not pretty. To be honest, it's not something that I'm going to get into because I can't quantify the risk with enough technicals. And I'm just being honest with you guys. If there was a trade here, I'm all about trading. I'll get in that trade, but it's got to be a high-quality trade, and I'm not seeing that on Peloton. Now, another chart here, guys, so check this out. We have another chart here of interest called Foot Locker, and we all probably have heard of Foot Locker. Now, Foot Locker is getting pummeled as well, and I feel like every day most stocks, because of the type of market we're in, are getting pummeled right now. It's just the nature of the beast, but let me just zoom out here. In fact, let's go to our weekly chart, see if we can see. There we go. That's a little bit better. We can get a little bit more data here. So we have Foot Locker, which is down at $15.50 from a close yesterday of $23.20. That is a mammoth drop. Now, one of the things I'm seeing is it looks like we've taken out this low here already. So again, just to be clear, that low is now no longer in play. Now, if we go here, let me just take a look. What's our next technical level? And it looks like, to me, there's a little bit of a level right in here, right along here. Okay, now let me just go to my charts and see exactly where that is. Bear with me as I do that on my chart here. It looks to be around 12, basically a pierce of 13. Pierce of 13. So it's still got a little ways to go before it hits a level that I would really feel confident in. And remember, anytime you're day trading a stock like this, it's a falling knife. It's risky. If I do these type of things, I do them with like this much money, like so little, trying to make a nice little score, but again, not enough where if it goes against me, it's going to really hurt me that bad. And that's the way you have to treat day trading. You want to be very aware of how risky day trading is. But it looks like 13-ish, or a pierce of 13, starts to get interesting on Foot Locker. All right, I'm going to jump over here. We're going to cover Bitcoin as we wrap things up, because I want to show you this, guys. This is actually really interesting on Bitcoin. So if we go to the Bitcoin chart, all right, now this is where it gets tricky with Bitcoin. There's a bunch of different exchanges. And this is honestly one of the things I hate about it. We need something where price action is kind of uniform, because on the Bitcoin chart, this candle is a bottoming tail. But I'm looking at Bitstamp right now. Okay? So a bottoming tail tells me there's a reversal that could be coming into play here in the near term. Now, by the way, I don't think a reversal means we're going back up here or up here. I just think we might retest this trend line right here. But still, as a technical trader, that's something I'm interested in. Now, one other thing to note here is, and this is the problematic issue, is that if you go to Bitcoin on Coinbase, all right, then notice how here, let me just refresh this, right? So notice how, and again, this is something I'm going to go over, this low of the candle yesterday didn't take out this low down here. For it to be a bottoming tail, it has to be the lowest point in recent history. This was lower than this, therefore it's not a bottoming tail. So on Bitstamp, you got a bottoming tail. On Coinbase, you don't have a bottoming tail. I looked up on Binance, it is a bottoming tail. So this is the tricky thing, is the bottoming tails are reversal signals, but you don't have it on Coinbase. You have it on a couple platforms, a couple not, or a couple exchanges. It makes it very, very tricky. All right, so just be aware of that. I'm pointing this out because I think it's worth noting that on some exchanges you did get a bottoming tail, but it certainly isn't something that, again, I could say universal. If it was universal, it would be a glaring short-term buy signal on Bitcoin. It's not, and therefore it's a little murkier. I wish it wasn't, but I'm just giving you the facts. This is the data. The data is that it's not universal on all exchanges. All right, so in any case, guys, this is where we are. Today, NVIDIA earnings after the bell. That's going to be huge. I've hypothesized that that could sway the Federal Reserve to either hike or not hike. The reason is if NVIDIA, let's say, rallies 10% on earnings, the market will probably be up 3 or 4%, and that could sway Friday's speech to be more hawkish into raising rates. On the other side, if NVIDIA dumps, it could dump the markets, and it could ultimately yield a more dovish Fed on Friday. Overall, Friday is a big day. Today after the close is big. Jobless claims will be tomorrow. I'll dissect the earnings tomorrow in the game plan at 9 o'clock, and I'll dissect the jobless claims, and we'll go over more data and more charts. This has been a full-packed episode here. I hope you guys have found it useful. Thank you for making this one of your top plays or top things to watch every single day. I do appreciate it. Join me tomorrow. Follow me on Twitter. Follow me on YouTube. Love you all. Take care.